So today we're talking through a question we get often: is now a good time to invest? But most people feel fearful around the news, the headlines that are out there. And right now there's a lot that could be worrisome: inflation risks, supply chain problems, the risks that come with reopening an economy, right? There's euphoria everywhere. All things seem to be going up. So Grace, talk about a little of what is and that reason and why we're always worried about investing our cash.
It's kind of funny when markets are doing well, we might be afraid to invest. When things feel rocky, we might be afraid to invest. And there's a lot of valid reasons to feel that way, but it might be scary because you might be afraid, especially with recent headlines: all-time market high, another all-time market high. Well, what if I invest this cash I have right now, and then that all-time market high becomes a market low? It's not going to feel good. So it's scary. And so a lot of people have been asking, what do I do with this cash? So we get to have this conversation with people frequently, but there's always reasons to be fearful that are valid. But if we go back and look at the data and the financial science, we can have a good reason to invest, even when things feel scary, knowing that, yes, things are scary. And so, for example, in 2011 and 2018, we saw 20% declines. Everyone remembers what happened in March of 2020. Things were really scary. They went down very steeply and very fast. But I have to remember, they also came back up. So even if you had invested early in 2020, things were high. Well, if you stuck with a disciplined investment strategy that was well diversified, you'd still be better off right now than you were then at the time, an all-time market high.
Yeah, up to this point, all declines have been temporary. So talk about what the evidence, because we depend on evidence in our investment strategies when we're thinking about those, right? What does the evidence say if you're investing at all-time highs, what you may get?
So if we look at the S&P 500 and the returns that we're seeing in the S&P 500 at any point since 1926, money invested at all-time high, on average, 1 year later, had a 14% return. 3 years later, a 10% return. And 5 years later, also a 10% return, which now those are averages. There are some that would have been negative, but overall, those are pretty good odds.
Yeah. What is it? Something around 80% of the time or so, right? About 1 year,
Yes.
3 years, 5 years, you're likely to have better returns from those all-time highs. Now, you're going to have the corrections and the bear markets, right? You're going to get a 10% decline likely every year on average. So that's something to prepare for. But the cost to earning those higher returns is dealing with the volatility. So talk a little about how we build an investment plan for people to help them through those times.
For financial symmetry clients, we start everyone off with a holistic financial plan. So looking at all aspects of their finances, but a really key component we get out of that is setting a stock range. We look at what is your risk capacity, your capacity to take on stock. And as part of that, we look at how much money might you need to withdraw over the next 5 to 7 years. And that amount we want to keep safe. We keep it in either cash or bonds, knowing that the rest of that has time to ride out any market volatility, and that you're going to be better off in that stock side over the long term if it's invested in stock.
Right. Because there's a lot of pitfalls that investors can fall into if they don't have a plan that they're following, right? The classic one of market timing. People want to try to sell out of the market when things are high so that they don't experience that low. And many times it's hard to take advantage of those low prices because people are fearful at that time. So there's a lot of missed opportunities we see in those. So building out that investment plan in service to the financial plan, because those are the rules that you need to understand to help you know how much risk you should take, is a vital piece of your long-term success when it comes to financial planning. And that's something we do for clients here. It may be that you've looked for another financial advisor elsewhere to help you through that if you don't have the time, interest, or ability to do it. But we would hope that you could do that out of this. We'll have some examples in the show notes below with a description and the blog post that we have that coincides with this, also a podcast. And if this is your first video you've watched, we do this every 2 weeks. So we have different questions that people will ask and we answer and give feedback on that. So check in with us, and you could subscribe if you don't want to miss our next episode. Thanks for joining us today.